Hello, Warriors. One day left in July. Who's ready for August? Alexander, how are you? Abjith, how are you? AJ, how are you? Brand, Jordan, how are you? Michael Weissman, the whole crew, team, how are you? Everyone doing okay?
Morning, Dale.
How was golf?
That was hot.
I've been waiting all weekend to ask you that, Blake.
Oh my gosh. I was just having a conversation with Mark in our chat room about, he asked how it was. We were actually the last group on the course, and it was great because my nephews they're young, and so we got to, and my neighbor went with us, and he's a good consistent golfer, but he's a better coach, and I brought him specifically to work with my nephews, and because there's a few things that I couldn't figure out about their swing, and so he was tweaking them, and it was great because we last group on the course, we got to really take our time, and it was hot.
Yeah,
it was hot. It was no doubt about it.
I can imagine, because at night it's not cooling off even when the sun goes down that much.
Yeah, my wife is like, I can't believe you're willingly going to do that, and I'm like, come on, we've been together 20 years. You know I'll go out. I don't care.
Yeah.
So anyway.
All right. Well, I'm glad you survived. Didn't have heat stroke. Okay, bro.
Barely, but we did. Thank you.
And probably you had a beer on the course. Anyway, so before we get to FX, everyone, once in a while things, kind of jump out at me. And so here's a question, and I put it to the whole team. Here's your 10-year yield. All right, so we had that breakout. It's pulled back to the breakout. I'm not saying that it won't eventually break down, but my question is, why, after all the great benign inflation news, is the 10-year still holding a weekly breakout when I think already it should be 330? That's I wonder what you guys are thinking. I mean, we're one good day from breaking out and getting ready, extending this move and to challenge the highs from last fall. And also TLT, I mean, people have been trying to bottom pick this for a while. I thought I was looking for it to get back over 104. It failed. These things still haven't done anything right. And look at the low in October. All we've done is work off the oversold condition by, I don't know, retracing 5% of the move from where they were at 160. So why do you think yields are so sticky here? Why don't I start with Ryan? Okay, came in.
Hey,
Hello?
Dale. Hey, everybody.
Yeah, I'm here. Sorry, just put me on mute.
You want to go, Ryan, or should I?
No, you go ahead, mate.
I think it's a question of the market is pushing back against their recession expectations. Okay. And that's why yields are holding up pretty well. I'm also noting that the inversion is starting to come off. Okay. And the last thing that I read this weekend also is that the Treasury is expected to, so far they have been doing mostly bills, but they are expecting to, in the upcoming quarter, to increase their bond issuances. So I think
who's going to buy them?
The bond shark, it's partially a bond shark thing, keeping the rates high for the Treasury to pay up. But I think it's mostly this recession calls being having to rethink, at least for the timing.
Okay, or maybe it's supply. Maybe there's just all the supply. And I think there was a note auction last week that Santoli gave a D. So some of the auctions haven't been going great. So what do you think? Can supply outswamp demand? I mean, China's not buying these things anymore.
Yeah, it could, because I thought that a lot of those treasury auction would be met by very large interest to buy them, because there's so much money in the system. But and we have seen the reverse repo coming off a little bit. But then last week it seems that the money market funds, they are at record highs, $5.5 trillion dollars. I'm not sure if there's much more to put in there. So they may that may be the case where you say that all of a sudden supply is going to outweigh the demand, because there is, if there's not enough demand, if the people are already in those money market funds, they may not have that much more to give, right?
Yeah, and you know, that the move of deposits out of banks is still happening at a real high clip.
Yeah.
You know, there was a failure. It's a small bank, Heartland Bank, few branches, but that should continue to put pressure on the banks. I was surprised by the amount that the regionals rallied. It sounds like we're doing a stock show here, but let me just find that KRE is, there's a couple of them. But here's one. Okay, so they had a pretty good rally. I mean, it doesn't look great on a weekly. I think maybe all it did was rally into the gap with everything the S&Ps did. If these roll over and start heading down again, which I think they could, you know, look at where they retrace back to, the breakdown. So I wouldn't be long the banks, especially the regional. So people think they have a bottom. I think it's a bear market rally because people are still pulling deposits, and not, you know, not just a trickle either. It's still kind of a flood. So anyway, those were some of the things that I was thinking about over the weekend. So you know, go ahead. You could say it to me. Get a life, Dale. Get a life. Get out of the house, Dale. Huh?
I want to add something about the yields that you were talking about and inflation.
Yeah,
I agree with what Kay said, obviously, or what you said as well. I just want to say, look at 1 year, 2 year, and 3 year. They have barely moved. So that tells you that this the market still thinks that rates are going to be, yes, we are pricing cuts, but we're not pricing as aggressively as we were, you know, I don't know, a couple of months ago or 2-3 months ago. So the market thinks we're going to be a little bit in higher for longer mode. That has a risk, you know. I think that's for the rest of the year.
That's the pain trade. The pain. So what I'm talking about today could be the pain trade, because everyone's expecting lower yields, because the next move by the Fed, even if they go one more time, is to, you know, they think they're going to pivot. But, you know, it's an awful lot of good news the market's absorbed should have at least negated this breakout. It tried to, but it hasn't yet.
The other thing to consider is that the 10-year is really driven by flow. I've said this so many times. Remember, I used to sit next to the bond guys, the bond traders at Merrill, and it's 80-90% flow and 10% everything else. So it's really not, you know, what the Fed's going to do 6 months from now or a year from now is not really going to affect the 10-year. But I think, you know, the market is still pricing cuts, but a lot less aggressively than it was previously. And I think that if the time comes for cuts, it's going to be more than the market's pricing. So we're kind of on a pivot, pardon the obvious word, close to a pivot, and you know it's going to go one way or the other. You know, if inflation starts looking like it's not going to continue dropping, which by the way I don't think that's going to happen. I think inflation is going to keep dropping towards target for the US. If it doesn't, then I think we are at risk of seeing the 10-year yield just break out to the upside and just not.
And Stelios, I was just going to add to that. I know you feel that inflation is going to come down. I still feel it's going to be very sticky. And I think that's what the 10-year and yields globally are really reflecting, is that we are going to have these inflationary pressures are going to stick around. So I wanted to add that to everything else that you guys have been saying, because I agree with everything else that you're saying, but I think this is the market suggesting, hey, we still have the inflation battle is not won, but that would be my view.
Yeah, no, fair enough. Absolutely right. The question, though, is we keep talking about inflation being sticky. We're talking about it when CPI was at 8%, 7%, 6%. Well, now we're at 3%, and we're going lower. So it's
sticky doesn't necessarily mean it's going to stay at 8%. I mean, I don't think any of us thought that we were going to be in a like an Argentinian type of economy
currency crisis.
I don't think any of us thought that we're going to have your loaf of bread that's I don't know,
goes up
to
doubles
5
overnight.
sterling. That's next thing you know, you got to pay 300 sterling for a loaf of bread. I mean, no one thought we were going to be in that, but I think everybody understands that we are in a sticky inflationary environment where it's going to be above 2%. It wasn't going to stay at 8% or 10% for a long time. Of course not. That was the COVID supply shock and stimulus measures. But for us to stay above 2% with most major economies, I think that's very doable. Personally,
no, fair enough. Fair enough. I agree with that. I think inflation is going to drop, but going forward after that, I think we're going to get to target most likely, but after that it's going to be very difficult to stay there and below. So I agree with that. And remember, mid last year I was saying that end of Q1 2023 we're going to see a lot lower inflation, where I was off by 2 or 3 months. So sorry about that. But
well, you should tighten your shit up. So
you've become quite the economist. So back to currencies. I know that most of us were bearish before that move. We wanted to sell rallies last week, and the way the yen got there, that it's a key point that you could have a price in mind to be a buyer or a seller, but it's not just the price; it's how it gets to the price. You agree with that, Blake?
Yeah. Oh, absolutely. Like that's why, when people ask me, especially when we're talking currencies, they're like, hey, Blake, you said when the euro gets to 111, you're going to short it, something like that.
Yeah.
And I'm like, yeah, but it got up there in literally in less than 24 hours. I don't want to short it now. But if it took 4 days to get up to 111,
right? Okay,
now it's getting up to levels that I find attractive to be on the short side. But if it gets up there in 30 seconds, I'm like, nope, no, thank you. Yeah. So it just how it gets there is equally as important on the time it takes to get there.
So I mean, the way it got back to 42, I'm not sure I want to step in front of it. I have more conviction about selling rallies in cable and euro than I do about selling US dollar yen, because
so one of the issues that we have with the US dollar Japanese yen, and I'm sure Ryan, did you guys talk about the move?
No, I haven't gotten to Ryan. So why, Ryan? Why don't you clue?
Oh, I was going to ask him because you were mentioning the dollar yen, and I don't know if he's talked about or if he had a chance on the Flow show, or was talking about the move in Japanese bonds. I mean, you see the JGBs, they've moved quite aggressively. Overnight. So that's
what the Nikkei do. What the Nikkei do, Blake?
It's grinding higher. Yeah.
Okay.
Yeah. So Ryan, what went on there with the do you want me to show Dale? Okay, here.
They've seen senior citizen charts long enough today.
Here's you were just talking about the 10-year, but let me go over to Japanese. You can see yields screaming higher. Here's the 10-year and GGB.
Can I just interrupt?
Nope.
If somebody doesn't like the comments we're making, you are free to go. Okay, this is a free show. Thank you, DJ. Carry on, Blake.
Okay. Here's the 5-year and here's the 30-year. So Ryan, what's happening here?
Well, obviously we've seen yields go higher. No surprise there that the market wants to push the Bank of Japan and push their positions. They've been locked in at that 0.5% mark for ages. They did come out and start buying bonds last night just to smooth things along, let the market know they're there, not to get too excited. That's sort of a little bit of a pullback in dollar yen at the time, but yeah, it's been grinding high, and I think it's all a reflection. You know, it's easy to look back. Obviously, if you look back at the Bank of Japan, they made a hawkish move, hawkish for them, but the markets realised it's one step forward, another 10,000 to go. So then it quickly said, right, well, they're not going to raise rates anytime soon. We're back to trading other stuff. What's the Fed doing? Well, the Fed data is coming out super good. That's a reason to buy dollars. And again, there's no reason why rates are going to drop that fast in the US. So that's the carry trade and the rate divergence in full effect there. You know, when is the Bank of Japan going to cut rates? Not next month. You still might be another 6 months, a year before they even think about raising rates. So
could yen trade 148? Could yen trade 148 still?
The yen could trade 150 down. You know, it's like, but
yeah,
you come away from last week. We couldn't break through 138.
Right.
Okay. And prior to that, we couldn't break through 145. And over that, we've had Fed, ECB, NFPs, CPIs, PCEs, everything you like thrown at that currency. And you know where the levels are. You know, we can go 148, but you got to get through 145 first. And if you can't get through 145 after everything in that huge rally up from 127, you know, what do you really need to break it and get up there to 148? You're going to need hotter CPI from the US, or the data coming in Goldilocks as some of it has been.
Higher yields.
What I'm doing last week, I had a plan. You know, for Monday, you knew my plan. It was get out my longs on the Fed, sell a rally, run it short into the Bank of Japan, and then see what happens after that. Well, now I'm in the see what happens after that. And now I'll happily trade up 144s, 145s on the short side, and I'll buy the dips if I see them, maybe 139s into 138s. In the middle, you do what you like with it.
One thing you pointed out, Ryan, today in the ForexAnalytix chat room is that we might have a false breakout here, and that's something that we should watch. Which I don't disagree with you.
Yeah.
My only issue right now is that we are above the 618 retracement, and it was like it held us, you know, obviously at the end of the week, but end of last week. But one of the things that you could also be looking at too is, you know, just completing a quick, you know, equal leg move here, which is just enough to screw everybody, right? Just enough to kind of get everybody out, and then you get a reversal. I think anybody trading like the yen, especially after watching it last week, if you hadn't figured this out, you know, literally over the last couple of months, you have to be trading with wider stops. I mean, these are very, very volatile moves that we're seeing in the yen. I mean, this is right here. This is a 400 pip move, just you know, following the BOJ. So keep those stops wide and position sizes small, so you can sustain the big swings that we're seeing here. By the way, the Mexican GDP came in a little stronger than had anticipated. Dollar Mex remains heavy, very, very heavy pair at this point. But you know, I keep getting asked the question like, hey, is, you know, the Mexican peso going to turn? Like, why would it? You know, when you have the S&P that just continues to grind higher, there's no reason for anybody who is short pesos to really, you know, or long pesos to really cover. Yeah. So no reason whatsoever.
Things have gotten you know, very expensive in Mexico, Blake. I mean, to go to a hotel there in Acapulco or Puerto Vallarta.
You know, so when you were in Tijuana this weekend meeting the ladies, was the hotel room a little expensive?
Yeah, prices they've doubled.
Really?
So,
wow.
Yeah.
You know, it's been a while since I've been to Mexico for a holiday, but that doesn't
you have to go with more than $20 nowadays.
What's that?
Yeah, when you were a college kid, you could go with $20, right?
Yeah. Oh no, I had less money in my pocket than that when I went to Mexico back in my late teens and early 20s. Yes, yeah, that's correct.
You don't want to go down there anymore. It's pretty, you know, rough. Well,
anyway, hey, real quick, you know, let's talk a little bit about, you know, kind of where we are technically in the markets. I want to point out, and let's go over to the dollar index. The dollar index is just shy of the 618 retracement. I'm actually long dollars. I'm long dollars going into this week. I have no problem being long dollars at this point because I think the dollar put in a false breakdown a couple weeks ago, and I think the bull flag pattern is going to play up past the 50 DMA. So as you can see, the euro is actually rejecting and starting to roll over its previous support, current resistance, 50% retracement. Didn't overcome last week's highs, you know, after we bottomed out this recovery. So that looks like it's going to roll over. Sterling, you know, just consolidating recent losses. We made a new low, new trend low, and just consolidating. The Aussie backed right up to previous support. That's acting as current resistance. And if you're, you know, obviously you're in the ForexAnalytix, you know, community, you knew that we were right up there and it was set up for a good short. So, you know, this is, and it still is right here. I think it's a great short setup for anybody who wants to establish new shorts. But you can see we're seeing, well, the dollar Canadian's pulling back because damn crude oil. Did you guys see crude? By the way, it just continues to just ramp higher. I mean, we're holding the bullish wedge breakout, but we're well above 80 now. And this is one of the reasons why I feel the dollar Canadian's under pressure today. But
can we complete it up here? You have a lot of bibs and stuff.
Well, look, we're at the 88% retracement. I think you can actually start doing some other stuff, like, you know, getting a little bit more longer term with this. You can probably start doing things like this, since this was previous support from way over here. See it like that. You know, we're almost at the 618 of this last leg. But, you know, hey, I'll tell you, crude oil still looks strong. I don't think there's any reason to trade it to the short side at this point. So that is also helping the dollar CAD. And by the way, I don't know if you guys talked about this at all during the flow show, but check out these Chinese markets. So here's the Hang Seng, here's the China 50, and then look at what's happening in copper. Copper is actually ripping right now, you know, breaking higher. Now I would say it's probably more of a bull flag pattern or a bullish wedge, but we're breaking higher this morning in copper. So anyway, just some moves there, some pretty good moves that we're seeing in the markets. So what else is on your radar for the week, Ryan? I know during the flow show you guys get a chance to sit back and look at all the data coming in. I know we have jobs report later this week, but is there anything else that's really jumping out at you? Because we have like the RBA tonight. I mean,
so you mean apart from the RBA, PMIs, ISM, BOE, services, jobs, apart from all that, not really, nothing else going on.
So let me ask you this, since so many economists are on the fence here with the RBA, you know, are they going to raise rates, or are they not going to raise rates? And I think this is, I mean, it is obviously there are many like half the economists are expecting there's going to be a rate hike tonight. How about if they don't?
It's about 60, I think 66%, something like that, who expect it unchanged according to probabilities. But it really is a
shifted a little bit from last week, but still, right?
RBA expectation took a bit of a hit after the CPI data, the quarterly CPI data. I think it was last week. Came in a touch softer. You don't know with these guys. I mean, you know, they're hiking, they're pausing, they're hiking, they're pausing. It really is. It really is.
They don't know.
They don't know. Exactly. That's exactly what I haven't known for years. They've been one of the worst central banks out there.
That's why Lowe's getting to boot, right? Yeah.
Well, no, that was for other shady deals that he was doing, hosting events outside of his realm, shall we say, giving insight information. But, you know, these are the guys that said they wouldn't be hiking rates until 2024. You know, and here we are they don't know where they're going to hike tomorrow, let alone in 2024. But I think, you know, we can argue around whether they're going to hike or not. All we can do is trade it, and then we've got to trade the levels. I think probably your better trade potentially for tonight is Aussie yen, because we know the yen's weak. So if you get something that sends Aussie yen down while all other yen pairs are staying up, that's a potential opportunity. You know, get a decent dip in that one, maybe down towards that sort of 93.20 area. You know, it might be a decent enough stretch point away. As long as the yen's weak everywhere else against every other pair, then that's a potential trade to buy the dip.
All right, that's not a bad idea. Hey, Stelios, I don't know if you're paying attention to the RBA much, but you have any thoughts there?
In a word, no. It's a 50-50 whether they're going to be.
Sounds like a no to me.
Yeah.
Because if
I'll leave it at
you had
that.
something to say, it was going to come blurting out of your mouth. So, so nothing there. Hey, Ryan, I know it's early. I know you love, you know, Andrew Bailey, but what do you think is going to happen with the Bank of England this week?
I think they're going to hike either. Well, I'm going to sit on the fence now. So they're going to hike either 25 and indicate more to be done, or they'll hike 50 and say pretty much indicate they're done.
When's that, Ryan?
Thursday.
Okay. We'll be covering it live here. Cool. By the way.
Yeah. So that, you know, I think the market's drawn down its expectations for hikes. Now, you know, we were pricing 6.75%, and now people are struggling to price 6%. I've always said 5.5%, 5.25%. At the very most, 5 3/4 would be their top. So yeah, they'll either get to those areas in one hit, or they'll do it in 2 hits, and then they'll be done.
So tell me about and tell us. You know, obviously you live in the UK, so you know, you guys are dealing with no growth and high inflation, which is stagflation in a nutshell. How's the Bank of England, in your view, going to tackle your stagflation problems? What do you think?
Badly.
Right,
okay,
but
how
I mean,
will they exacerbate them?
Yeah, I mean, they're just fanning the flames at this point because they're a bunch of dipshits. But how are you going to? What's going to happen with the UK economy? It worries me. I mean, you know, because you guys are all there.
Well, first things first, it's never as bad as everyone always says it's going to be. That's the one thing you can take from the UK. I don't see the economy here collapsing anytime soon. There's going to be some pain when the mortgages come up. These 2-year deals, a bunch of them coming to the end. But we had the consumer consumer borrowing data this morning, and you know, there was a lift up of about 600 million in borrowing, but none of it was going on the credit cards, and that's always the thing I look at, the consumer credit. How much is people putting on the plastic? Because if that starts shooting up, that tells you that there's problems. People are, you know, struggling to make ends meet, so they stick it all on the plastic, as we call it. But there was a whole load of borrowing coming in, personal loans, car loans, that sort of thing, and we got a big movement going on over here because of emissions. And look at me talking about climate, because of emission zones going in at various cities and being extended. Everyone's checking in their cars and upgrading their cars so they can comply with these emission levels. They don't have to pay epoxy £12.50 a day just to drive down their own street. And there's a lot of that been going on for probably a couple of years now. So, you know, people are still going out, they're spending. I go out the weekends. I was out Sunday to the cinema with the missus, packed. Everywhere's packed. Restaurants packed, cinemas packed. And you think, well, where's the pain? Too. Yeah, where obviously you've got your poorer areas, your less affluent areas, and they're probably going to suffer, but they're not the majority of the country, fortunately. So, you know, it's never going to be as bad as what they make out. Will there be some rough times? Of course, there's going to be. Look at Germany. Germany had 0% growth Q2, and their data today, retail sales down, everything down, you know, and you think, well, how have they got flat growth? Why have they not got minus 0.3% growth with what's going on there? So, you know, but again, if you want to trade it, who's better country? You're going to trade US over Eurozone, US over the UK at the moment, because that's got the better growth, and that's going to be your influence for trading currencies like cable.
Yeah, I think about the cable. I'm sorry, did we have data coming out this morning? No, well, I mean, it's really slow over here, and I didn't even get a chance to talk about the inflation data in Europe overnight, because the Eurozone inflate, like, we had core CPI come in a little bit stronger than expected. I know you guys are dealing with, higher inflation as well in the UK. But we had, Spanish inflation came in a little hot, I think, or is it Italian? I can't remember, one of the two. But look, I think about the UK economy and how I want to play it. And I think I want to play it through the euro sterling, but I have a hard time buying the euro too. So I
like this level, Blake. I think it's worth a shot buying it here, looking for a higher low, wrong under last week's low.
Yeah, I mean, that's what I'm thinking, that I'd like to play it to the long side. I guess, it's hard to get too aggressive ahead of the Bank of England on Thursday, but I think this is how I want to do it. Ryan, are you still constructive on the euro sterling? I know we have an interview coming up, right, Dale?
Yeah, I'm still long.
No, I missed that day on the calendar because I went right to August, and August is tomorrow.
Okay.
So no one today.
Yeah,
got it.
Long.
Okay. So
I'm long and happy to buy dips into 85 at the moment.
Yeah, okay, you're buying dips into 85. That makes sense, and I think I'm gonna be joining you, Ryan. I really do.
Well, tell me where your bid, so I can bid a few pips out of you.
Front runner.
Okay, all right. My bid's at 85.
No love lost here. No love lost here.
my bid will be 85.10. Yeah, because I kind of want to play the sterling on the short side, as I think the Bank of England, like you're pointing out, is probably near their end game, if you will, in monetary policy. But the problem is, I feel like the ECB is too. That's where it's like, where's your edge?
Yeah,
I would argue that the Bank of England has a little bit more to do than the ECB. Did you see Italian GDP this morning negative? Not a good sign.
Oh yeah, negative 0.3% for the quarter.
Yeah. Europe seems to be turning lower faster than the UK, and I am still constructive the pound. So I'm looking to sell euro pound rallies. So I'm the other way, but obviously not here.
Oh yeah. Okay. All right. Well, that makes sense. Well, maybe selling euro sterling rallies, up at the 200-day moving average.
Yeah, 87 to 87.2. Yeah.
That makes more sense.
Tell us where you are, Stel. So if we're long, we know where to get out before you jump in.
Right. Just let us know where your sell orders are at.
I'm going to argue both.
Well, hey, I just want to say, I know it's summer, and I know there's a lot of people on holiday. It's a problem with the trading this time of the year, but this week is a week chock full of stuff. We have the RBA tonight, which is going to be, if you're in the ForexAnalytix community, make sure you're in the chat rooms there, because I'll be in there along with a lot of other traders. You can see how Aussie's pushing right up against some resistance right now. We have a lot of US data this week, like ISM. We have New Zealand employment. We got ADP data. We have ISM data, like, from a lot of different countries, by the way.
A lot of big earnings too, Blake.
At the end of the week, we have Apple and Amazon, and other companies too. We have non-farm payroll. We have Canadian jobs report. Wow. So a lot of stuff happening this week. I'm
exhausted already.
I know. I was tired last week, and now this week it's going to be even crazier. But and
thin markets too, so we could get some moves.
That was exactly the point I was going to make. It's like, you got a lot of people on holiday. We've got a couple of our team members that are gone, enjoying themselves for the summer, and there's a lot of people that are doing that. So there's less liquidity. Less liquidity means higher volatility. So we're going to get probably spiky moves all over the place. So anyway, I just wanted to bring that up. So before we go, Ryan, anything on your radar today? Something that you're like, man, I'm thinking about doing that today.
No, because we got nothing out really. Keep an eye on the Chicago PMI. That's the one thing I will say, because that comes out 2 minutes early to subscribers. So if you see a little move in the dollar around that time, depending on which way it goes, you know there's going to be an out there number. And again, if it moves the market against what it's doing in the daily trend, that might give you a little opportunity.
Awesome. Stelios, you have any last minute thoughts before we head off?
For today, no. So
Okay.
have fun and enjoy the day.
Hey, you know, I'm gonna mention this again because I got called out last week, and I need to bring this up because Stelios you know said it, and I had to say it on the week ahead video. Look, I've been very, very bearish gold for a while, and Stelios even says I'm biased short or bearish as gold. But as I pointed out in the week ahead video, look, we got a nice head and shoulder developing here. You know, we break 1985 and it would be bullish. So, but until we break above that, I'm bearish, and send that yellow metal down. Just kidding.
I think it's ranging. I think we're ranging.
We are ranging, but a break above 1985 would be bullish near term, and I would think that. And remember, with jobs report this week, with a lot of important data coming out, it could be very influential. But near term, I think the dollar is very bullish, and this is the one thing that I feel will cap gold. Is as bullish as the dollar is. Now, I don't think the dollar is going to break out ahead of the week, or ahead of you know, especially services ISM. Maybe services ISM will be the data that can actually move the market, which doesn't come out until Thursday. So if we get up here today, like later today or even tomorrow, if we get, you know, maybe even Wednesday, ADP non-farm, maybe if it pushes us up towards these highs that we matched from last week, I still don't expect a breakout until the jobs report on Friday, if we're going to break out. And by the way, I don't think that the jobs market is ready to roll over and die just yet. So, you know, that's another thing. A lot of people are anticipating that, and I don't know if it's going to happen. Anyway, well, Dale, do you have any last minute thoughts before we wrap things up?
Yeah, I'm with you on the bullish dollar, and it almost looks like we could have a little ABC. I think you should be long the dollar from last week and, you know, just have a cushion. But if you're going to try and finesse it, maybe we'll get a pullback to that moving average 101.80, 101.60. And then you're wrong over that low, that huge candle low. Get out of the way under par 50.
Yeah, you know, I think the dollar is being constructive right now.
Yeah.
So yeah, it is.
Well, I've looked at the weekly euro and cable charts, and if this is a significant high that we could, you know, we've been rallying for a long time, right? Since the euro bottomed at 95. Really no major correction. Some Elliott guys think this completed the first bearish wave in the dollar from the 114 high, and now we could get a wave 2. So you do some fib work on from where they bottomed in October and where they peaked in the last week, and there's some nice downside targets with just, you know, 50% retracements.
So basically you think it's no, wait, let me make sure I got that correct. It would be this would be the first wave, right? Down.
Yeah.
This is it. Here,
that we completed at 99. That was a 5. That last
right.
That false break. Okay.
That was
so
1.
Now we get a 2.
Which could take us to, let's say,
there you go. 61.8.
Something like that, right?
Yeah, yeah.
I mean, you start looking at things like that.
That's exactly the roadmap I'm looking at.
Yeah, 1. Here's your 1. Then like 2 is somewhere up here.
Yeah.
3 could be that.
The big crack.
Yeah. 4, 5 would be slightly lower, and then we get a big reversal.
Yeah.
Once the dollar gets sliced in half, there you go. There's your roadmap.
Or at least 90, 85, something like that. It could measure to that. It's
possible. Think about the possibilities. Think about the possibilities here. All right. Well, Dale, I'm gonna. I think we can call it a day. It's gonna be fairly slow, but the rest of the week, remember, we got the RBA tonight, and then the rest of the week is going to be really busy, and we're going to be covering a lot of that live here on the F.A.C.E show. So thanks for everybody joining us.
Yeah, thank you, everyone, and thank you, team. And let's see, we do have 3 interviews. I'm going to try and get Michael Gaia for Friday. So let's see. Yeah, we have Neil Jacobs, Tim, and we have Reuters Jamie with us. I'll see what I could do about Friday. It's a good day to have someone after NFP. So have a great day today. Everyone, just use less leverage and wider stops so you don't get picked off, and consider alongside the dollar. I think the wrecking ball might be getting ready to swing. And don't just count your pips, count your blessings. See you guys tomorrow for Turnaround
Thanks, Coach.
Tuesday. Thank you, Blake.
Thank you, everybody.
I don't know where K-Man went, but thank you, K-Man and Ryan and Stel. Fun, good start, guys.
Cheers, mate.
See you guys
Cheers, everybody.
tomorrow. Adios.